Boom.
Welcome, everyone. I'm Rob Booker. You are in the Boris Schlossberg Rob Booker How to Day Trade the Euro webinar. We're glad that you're here, and we have a special two-part webinar series in store for you. Tonight I'm going to present a trading strategy, and tomorrow night Boris is going to present a trading strategy if you've got questions about economics or fundamentals, if you've got questions about how to day trade the euro, if you've got questions about the schedule of a day trade, if you've got any questions about trading the euro, you're in the right place. Tonight's webinar starts now, of course, you're in it. But tomorrow night, it's equally important, so we want you to be here tomorrow night as well. There will be a recording. Tonight, you're going to meet me and you're going to meet Boris. You're going to talk about the grunge trade with me. It's a day trading strategy for the euro. We're going to talk about TFL 365, which is where you can get more information about this strategy and others. We're going to do a raffle at the end. I'll tell you about that in 1 second. And then I'll tell you how to get the recording of this webinar. But before we do any of it, before you meet Boris and I, before anything else happens, you got to know that trading foreign exchange on margin carries a high level of risk. And it may not be suitable for all investors. And the high degree of leverage can work against you as well as for you. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could lose your voice. You could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You really shouldn't have any money that you can afford to lose at all, ever. And you should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. Boris, before we begin anything here, it's absolutely essential that everyone knows that trading FX and trading the euro it's not easy.
Yes, it's not easy being green, guys. Euro is definitely a very, very tough currency to trade, and nothing says it more so than today's activity. I mean, you can see how the euro trades really very much on headline risk, especially over the last 6 to 12 months. And headline risk is just by nature impossible to predict. I mean, we can be going one way. We started going out one way in Asia today, and then went completely the other way once the Greeks once again disappointed us, only then to flip up and have a burst up like right after the FOMC meeting when they suggested that, yeah, they're going to finally sign a deal. My point being is that it requires tremendous amount of patience and sometimes a lot of fatalism to understand that sometimes you trade the market and sometimes the market trades you. And today was certainly a day for a lot of people where the market kind of traded them. I was frustrated and at the same time partially glad that I didn't get a chance to trade off any of my trades today. I missed the trade, but at the same time I was also kind of glad that I didn't get into any bad trades today given the kind of headline risk that you have. And I think Rob probably feels very much the same way, that sometimes you just simply can't do anything about the market. It is a very, very capricious kind of a thing, precisely because everybody in the world is watching the euro, and every little quiver and movement can trigger it one way or the other. But over the long run, if you have a sound, intelligent, well-designed strategy, all of these day-to-day kind of frustrations really disappear, because over the long run is when you really get the value of having an intelligent, well-crafted strategy going on. There's somebody who asked a question here of does this strategy really matter? If money management is good, can you make money with any strategy? The answer to that is absolutely no. You cannot make money just on money management. Money management is just one component. It's an important one, but it's a subcomponent of the intelligent structure of the strategy, because ultimately what strategies do is they model human behavior. This is what we do all day long. We are not investors buy value. Speculators trade sentiment. So sentiment by definition means that we're modeling human behavior. And if you don't have a good model, you don't have a good strategy. That's really what it all comes down to. So today I'm actually very, very interested because everything you're going to hear, I'm going to hear myself completely new. I've never heard about the grunge trade. I'm fascinated to hear what Rob has to say about it. I know we're all here eager to to learn from him today. And I'm not going to take up too much time. I just kind of let him start and show us what's cooking on his plate, because he usually comes up with some really intelligent and interesting ideas.
All right, thanks, Boris. This is absolutely fantastic to be spending time with you. And I agree with so much of what you said, and I can't wait to disagree with some of it as well. The importance of money management is that you can take a completely great model and you can foul it up with money management that's irresponsible. But if you have a really terrible model, it's not like money management's going to save that necessarily. That's so true. I'm a registered commodities trading advisor, and I'm also the author of Adventures of a Currency Trader. You can find me at Rob Booker on Twitter. And Boris is a director of currency research at GFT, author of Technical Analysis of the Currency Market and Millionaire Traders. You can follow Boris on Twitter for trades, updates, and analysis at FX Flow. You should do that right away. If you're on Twitter right now, send us a message right now on Twitter and let us know you're in the webinar. And we'll try to do some responses through the night to your questions that come up from the webinar. There's no way we're going to get to all of the questions that come through tonight. So if you've got a question from the webinar, shoot us messages on Twitter. Just pound it out. Make it like the Super Bowl on Twitter or whatever, and we'll see how many of those we can get to after this is all over. All right. So here's what we're going to do tonight. Tonight, I'm going to teach you a trading methodology from start to finish. I'm going to show you a bunch of examples of the trades, entries and exits, and so forth. I'm going to tell you a little bit about how to get more information about that and trade updates throughout the day on that strategy. Tonight, at the end of the webinar, Boris and I are going to pick a random individual from inside the webinar, and we're going to offer a 30-minute phone call consultation about the trading that you do and use our experience to assist you in your trading. So stay until the end of the webinar. Yes, it's a bribe. I want you to stay the whole time. We're going to take another 40 minutes probably in this webinar. Stay till the end. We're going to pick a person at random, and we're going to call you on the phone next week, and we're going to spend 30 minutes with you and talk to you about your trading and invite you to stay for that. In order to trade this methodology, I'm going to get right to it right now. You need the Ichimoku Cloud Indicator. I don't propose to you that I'm an expert in this indicator. I've been to Japan many times, but that doesn't make me an expert on sushi or indicators from Japan. The Ichimoku Cloud is the strangest indicator, I think, that's available. It's got a bunch of crazy lines and clouds and all kinds of wacky stuff on it. In order to plot this strategy and trade this strategy, you're going to need to plot this cloud on your charts. MetaTrader makes it really easy. If you don't want to use MetaTrader, you can go ahead and use any other charting platform you want, as long as you're able to enter these inputs on your MetaTrader platform. And here they are. The Tenkan should be set to 18. The Kijun should be set to 52, and the Senku should be set to 104. Now, what the crap does that mean? The Ichimoku Cloud is made up of 3 settings, a Tenkan, a Kijun, and a Senku. These 3 settings are traditionally set to 9, 26, and 52. For this methodology, we have slowed this down. You're gonna hear this from me a ton. I never use indicators off the shelf the way they were built, ever. I always look at them through a different prism. I look at everything in my life through a different prism. I don't look at anything the same way as anybody else. I don't want to look at the world the same way as everybody else. I want to look at things differently. And I usually, with respect to day trading strategies, I want to slow the indicators down, especially in instances where I'm trying to speed the trading up. And it's a counterintuitive thought that you can apply to any other indicator that you use. Let's say that you are traditionally a fan of the stochastic oscillator or the MACD or moving averages. I strongly encourage you and implore you to slow those down. The traditional settings are what everyone is looking at. Everyone looks at them and they don't mean as much anymore. And when the market is moving quickly like it does in the short term, when you have fast-moving indicators that change directions all the time, you get caught in the noise. So I slow it down. I doubled the traditional settings. Some of you only have 2 settings for your Ichimoku cloud. If that's the case, double them. Whatever they are, double them. Do they have to be double? No, of course not. They could be triple. You could multiply it times pi or something. I don't give a crap. It doesn't matter. Slow it down. There's nothing magical about the Ichimoku cloud, and there's nothing magical about these exact settings. But when you apply these settings to the techniques that I'm going to share with you tonight, something a little bit magical does occur because you start to look through a different prism. The world is totally viewed differently. This is called the Ichimoku cloud on an indicator on a charting platform. It's usually under custom indicators in MetaTrader or in other platforms that you use.
Rob, Shinzo says, I'd never imagined that I would learn Ichimoku from an American in my life.
That's great.
I'd share that.
That's great. In Japan, we'll show you a copy of the books later. In Japan, the books that I wrote, I have like 4 books published in Japan now. There's like pictures of me wearing a Worldwide Wrestling Federation outfit and all like a pink sweater. There's all kinds of craziness. And it's interesting that I took strategies to Japan that I used over here, and then I came back from Japan and brought this. So I'm not an expert in this. If you listen to experts on the Ichimoku cloud, that doesn't mean they can actually trade it. I never look at something in the same way as those people. I don't even know how to pronounce these things correctly. I know how to trade them profitably, and that's all that matters. The other thing that you're going to need in order to trade this strategy is a good old CCI, the commodity whatever index. It's a very traditional indicator that generally is overbought when it goes above 100 and generally oversold when it goes below minus 100. One day in an airport, my friend Max and I were sitting in the airport lounge, and they said that the flight was oversold. And Max just yelled out with his arms up in the air, says, "Buy it!" because it was oversold. I thought that was really funny. Traditional setting for the CCI is 14. I didn't just double the CCI. I multiplied it by, I don't even know what the number is. I just added 90 to it. When I added 90 to the CCI and turned the CCI setting to 94, it slowed the CCI way the heck down. And you're going to see why this has an extraordinary effect on what we're doing. It makes a giant difference to look at the CCI through a completely different prism. You're going to need both of those indicators on your charts. And here we go. It's a simple strategy, and I'm going to show you all of the trades that were produced over the last 7 days of time, and I'm going to take your questions. Boris, I'm going to do one example, and then if you see a question come through while I'm looking at that example, you could pick maybe the best question that was asked. I'll answer it, and then we'll move on. There's no way we'll get to all of them with 710 people here, but we're really grateful you're here, and if you tweet me, I'm going to try to answer your questions. All right, here we go. There is, with the Ichimoku cloud, when you originally plot it, there are several additional lines in addition to the clouds. There's a green line, a red line, and a blue line that you can see in the middle of my chart. Those lines are not meaningful to me. They are very meaningful to people who invented this indicator. I think it was invented by some Zen master in the year 1000. I have no idea who invented this. For all I know, Ichiro Suzuki invented this and then went to play baseball for the Seattle Mariners. All I want is the cloud. So when I go into my charting platform and set this up, I delete all of the lines except for the cloud. Of course, once again, I'm looking at it through a different prism. I'm changing the way it's looked at. I don't want to see all the extra crap on it. I want to simplify, I want to reduce, and I know Boris does this too. I want as little as possible on my charts in order to make a decision. All right. You can use other, you can trade this strategy with other currency pairs, but we're focusing on the euro dollar. When the euro dollar falls below the light cloud, you can see this example illustrated very giantly and very clearly on the chart in front of you right now. When you see it fall below the light colored cloud, that's a sell trade. A candle that closes below the light colored cloud is a sell trade. At that moment in time, it's time to sell it in the charting platform at market. You cannot trade this with an entry or a pending order, you must watch the chart. This is a day trading strategy, and for day traders, you understand that you got to watch the charts. There's no way out of that requirement. There's no way to do that. I trade this on a 5-minute time frame. It's a great time frame chart for short-term trading. You could also use a tick chart if you trade futures, and you could also use a 1-hour chart or a 15-minute chart or any other time frame you like. But I produce trading signals and profitable trades of my own using the 5-minute chart, and it can produce 1 to 2 trades a day inside of any session that you care to look at. I wait for a candle to finish below the light-colored cloud before I sell. When a candle closes outside the cloud all the way, that's the entry. The strategy will generally give you a better price than what it originally gives you. For example, in this situation right here, this is a sell trade. The market went up after that sell trade. The market rose after it fell below the cloud. So you don't have to take the first price it gives you. It's like waiting for something to go on sale. When I was negotiating for office space recently, an old friend that owns a lot of real estate told me, if your first offer doesn't completely offend them, then you offered too much. Same goes for trading. When it falls below the light-colored cloud, I want to sell it, but I don't want to pay too much. I don't want to do that. I want to be on the better end of this deal. So what I'll often do is wait for it to close outside that light-colored cloud, and I'll wait for it to go up 5 or 10 points, and I'll take a better price. It happens almost every single time I can get a better price. I can pay for the spread on the trade. I can do all kinds of things, but I wait for that. I get a better price. And it helps me every time to get just a little bit extra out of it. It helps my stop loss go closer, cuts my loss off quicker, and it makes my profit target larger. It takes patience to do this because when we're day traders, we want to get in the market. Boris, you know what that's like, to want to get into the market, to be Tony Montana, right? You want to just go for it. You want to just pound on it. You want to exact revenge on the market. But you get to be patient here, and you get a better price. And the 5-minute chart is for the entry, it's for the exit, it's for the whole trade. If you use the 1-minute chart for this, you would use the 1 minute for the entry, the exit, the whole trade. 15-minute chart, same deal. All right, let me move on. That's the entry. The stop loss goes above the light cloud. It's a piece of cake. The light cloud's always going to be moving as it goes, but that's where the stop loss goes. The stop loss is above 1 pip above, 1, 2, 3 pips above the spread above that cloud. We want to cut this off as soon as it goes above. Everybody keeps asking me what time frame this is. It's the 5-minute time frame, but it could be any other time frame you want it to be. But I use the 5-minute. Yes.
Rob, on a 5-minute time frame, what is the general pippage of stop loss? What's the average stop loss?
30.
That you pretty much put
30. 30 is about the most. Yep. Yep, and that stop loss is tight. We don't want to let that run. Boris, you know what that's like. We don't want to let this go. We're not going to let this. We're not going to justify it or say maybe it'll come around. We're not going to do that. We're not going to be kind to it. This is like when this goes above the light cloud. It's like an employee that's stealing from you. You want nothing to do with it. You have no. Right. It is not a negotiable situation. They are not going to treat you right. You do not give it a second chance. You don't become patient with something that is costing you money. If someone were smashing your legs with a baseball bat, you wouldn't give them the benefit of the doubt. You would protect yourself. You don't ever consider that the market only needed to. I always say this, when you give the market some breathing room, it turns around and strangles you. So you don't want to give the market breathing room.
Agreed.
That's the stop loss. The profit target comes from our CCI setting, and this is bizarre. So for those of you out there that have never changed the settings on your indicator before, I want you to wrap your head around a concept that is brand new, and that's why you're here, and that's why I'm so grateful that you're spending some time with us. I don't know anybody on the planet Earth that would ever do this to their CCI. Here's what I did with it. I made my overbought and oversold levels on the CCI 225, not 100 and negative 100. I made it positive and negative 225. When the CCI reaches 225, it will generally take one last exhaustion dive below, and that's it for us. When it hits negative 225 on this trade, this red circular area, that's it. It's out. This is going to be 30 to 50 to 60 points with as much as an additional 100 for those of you that want to keep part of the position open and let it ride. So let me take you through this one trade that we looked at from start to finish and explain it again. The sell trade happened when the candle fell and closed below the light cloud. The stop loss went above the top of the cloud, and the profit target was when the CCI hit negative 225. In this instance, this exact instance, the entry was approximately 31.40. That was an entry for me on a trade recently on the signal service. The stop was at about 31.75. It could have been 31.60 at 20 pips, and the target was 30.70. That's a 70 pip target in exchange for a 20 to 30 pip stop loss. That is a 2-to-1 reward to risk ratio with much additional profit to enjoy if you would like it. All right, let's look at another example. The opposite side of this Ichimoku business, this grunge, is a buy trade when a candle goes above the dark cloud. So let's look at an example of that. In this example here, a candle goes above the dark cloud and closes above the dark cloud. And then it just turns around and falls below the cloud, and it's over. So an entry comes at about 32.65, and an exit comes at about 32.50 at the worst. That's a 15 pip stop loss. And Boris, that's a little bit smaller than the average, but you can get a sense for we're not going to sit around in this thing. We're not going to babysit it. We're not going to be patient with it. We're not going to try to appreciate it for what it is or look at its true inner beauty. We're cutting this thing off. This is it. It's over for this trade. Period. End of story. No patience. As soon as that turns around,
sounds good to me.
As soon as that turns around, it falls below the light-colored cloud. Boom, shakalaka. And you can see here, falls below the light-colored cloud and closes below the light-colored cloud, turns around, and we're going in the opposite direction. One thing that I really appreciate about Boris is that Boris has trades ready to go in either direction. We don't suggest that we know which direction the market's going to go. We're balanced individuals. And Boris, you and I have learned that if the facts change, that our opinion has to change too. We can't argue with it, can we?
You know what's amazing about that, by the way, is how often you think the market is going to go one way and it goes the exact opposite way, and you're just astounded by that. And then more importantly, it not just goes the exact opposite way, but it goes the exact opposite way with force, with tremendous amount of power.
Right.
And this is the key thing I think that a lot of people need to understand. The longer you trade, the more mercenary you become. You really begin to appreciate the fact that A, first of all, you don't know crap, and two, that the market will surprise you more often than not, and you have to allow it to surprise you if you want to profit. This is a perfect example of where if it doesn't work one way, you have to have the zen, the absolute sort of mercenary attitude to go the other way and let the price action dictate its move. Because remember, we're not in the business of telling the market who is right. We're in the business of figuring out where the market is right now.
Right. It's so true. How do we avoid the chop here? Good question. Do we move the stop along with the cloud? Great question. In this example here, let's talk about how we avoid the chop. And then I'll get to the stop loss question. In this example here, we have a sell trade below the light colored cloud. You'll notice in this example that the stop loss goes above the top of the light cloud. That stop is going to move with our trade as the light cloud goes down. The target is going to be when the CCI goes below 225. It's almost immediate. It's almost immediate. If it goes, and here's the question about chop. How do you avoid the chop? If you take every signal, someone said, how do you avoid the chop? And the answer to that is, if the CCI is already hitting 225, the market's overextended itself and you don't want to take the trade. Second of all, JP, by setting your Ichimoku to these ridiculous settings in the first place, you will be shocked at how much chop you miss out on. I got another way that I'm going to tell you about in a minute, but we'll get to that in just a sec. In this example right here...
Rob, I have an execution question for you.
Sure.
Rob, sorry.
Yeah, go ahead.
Question for you because the exit comes on such, usually on an extreme move. How do you, quickly exit out of a position at sort of maximum potential? Are you exiting market? Are you watching this very, very carefully? Do you have a limit order somewhere that you try to get triggered? I mean, how do you do this mechanically?
It's a great question, and the answer, I'm going to actually get to that exact question. Do we exit at market, or do we put a pending order in to exit part of the trade? It's a great question. I'm going to answer that for sure. Here's another way that we avoid the chop. I never take two trades in the same direction, and you got to listen to this, everyone. I know there's a lot of people here, so write this down. Everybody pause for a minute, close your eyes, and imagine. Everybody, for just a minute, just imagine this in your mind. In this chart right here, we have two closes above the dark cloud in a row. One here, one here. That's chop. We never take two in the same direction unless there is a separation between those two entries of at least 50 candles, 50 bars. So Boris, you take one, if it stops out, if another one happens right after that, we don't take it. That's chop. That's noise in the market, and we don't do it. We don't want anything to do with it. And so what that will do is it will weed out a significant number of trades that are losers. In these examples that I'm going through today with you, I'm looking at every trade produced on the 5-minute chart, every single one of them over the last week, and the win percentage is fantastic, and there's very little chop because our indicator is set to such a high value. See what the next example here. Here's the next example. In this example here, we fall below the light colored cloud right here, and we sell. The profit target is when the CCI got hit at negative 225, right in this green area right here. Boris, I'll have an expanded answer in just a moment, but the general answer is at market, when the CCI hits that 225, you got to be out. You could also just set a profit target of 40. You could also just have a profit target of 40 pips on this 5-minute chart, and that'll be done. You could do it either way. You could set the profit target for 40 because that's a really reasonable and easy number for this to get. Or you can get out at market. You can also get out when the market just slows down, or you have 20 or 30 or whatever pips and you want it. I'm not here to tell you what you have to take, but I am telling you once it hits negative 225, you got to take some of this off the table. Let me take this one step further and repeat a concept that I said earlier. We have an example right here of a sell trade in red in this box. We take the profit when it hits the negative 225. And then right after that, soon after, we get another close below the light colored cloud. No trade. It's X'd out. There's not 50 candles or bars of separation between those two. We completely avoid the chop. There's two trades after the first that are not profitable trades. And we don't take them. We don't want anything to do with them. Someone says, what about going for a buy trade when it hits negative 225? No. You'll see in a minute that it can go 100 pips past that. So you don't ever want to do that. You don't want to do that. Not at all. No, it's what Boris said earlier. You got to have a good model, and that would not be a good model. That would be a terrible model. You'd actually do better if you sold it at 225, probably. Here's another example. It's the next example. It's February 9th. A close below the light-colored cloud in this red box.
Sorry.
Yeah, go ahead.
Rob, I was going to say, that's such an important point. I just want everybody to understand it. The single biggest mistake I think novice traders make is buy extremes or sell extremes, thinking that the indicator themselves is going to be a great entry point. It generally tends to be the exact opposite. The extremes are simply short-term pauses in probably much longer continuation of a trend. So you tend to get stopped out a lot more than you cash the turn.
So true. So true. 50 candles on a 5-minute chart are 250 minutes. So you can't take two trades in the same direction. You can take it in the opposite direction, though, but not the same direction. Let's look at this example. An entry here at approximately 32.70. Stop loss would go above the red cloud. Doesn't get hit. Profit target goes here when we're down at negative 225. Entry 32.71. And in this case, the market wasn't moving very much, and it was an exit just like 10 or 20 pips later. Not much there, right? Look what happened next. It went this much further. So how does somebody go about taking more profit? This is the second part of my answer to Boris from the earlier question. When it hits negative 225, here's my suggestion. Take some of the profit off the table. Get some money in the bank. Take the money. And then let some of this run. Do not buy it at negative 225 for the reason that you see on the chart in front of you right now. You do that and you're down 100 pips waiting for it to turn around. So you don't want to do that. You don't want to do that. If the red cloud expands, your stop gets bigger. If the red cloud contracts, your stop gets closer. Let's look at another example. In this is the very next example. It's right in the middle of the chart here. It's the very next example. I zoom in and we get a buy trade, and it's a loss. A buy trade above the dark cloud comes when a candle closes above the dark cloud, stops out below the cloud. An entry around 32.75 and a stop out around 32.60 at the worst. About a 15 pip stop loss. Never gets to a profit target. No money. Gone. Over. Do not keep the trade open. Don't wait around for it. Don't be comfortable with it. Don't forgive it for its mistakes. Dump it. Here we go. Euro dollar, 5-minute chart. Very next trade, February 10th. Close above the dark cloud. That's a buy trade. Because our settings are so big on these things, you do not get a lot of noise trading. You get a lot of clean, great trades. Close above the cloud. Candle closes above the cloud at 32.25. The CCI goes above 225, and we wait at least 10 candles before we close the trade. If it's already above 225, you might not want to take it at all. If you do take it, you give it 10 candles, and that's it. Because, Boris, you're already at an extreme. You're at a giant extreme. So you give it about 10 candles, 10 bars. That's 50 minutes. It's about an hour. That's great for a day trader, and that's it. So the Ichimoku cloud set to 1852.104 and the CCI set to 94. They're not going to produce 50 million trades every 5 minutes. You can go down to the 1-minute chart and you get more of them, but they're going to be clean breaks here. If you open a trade and it's immediately the CCI goes above 225, keep it open for 10 candles and you're going to get a little bit more profit out of that. Paul says, when the CCI set to 14, do a better job of confirming my entry. No, it's not for the entry. The CCI is for the exit. The CCI is for the exit, Paul. So no, we don't want anything that's looking like what everybody else looks at. Okay, here's the next trade, February 13th. A close below the light-colored cloud. When the CCI is already all the way overbought or oversold, and this trade opens, the risk to reward is going to be like 1-to-1. So I don't want to do that. In this example, the CCI is not already oversold, so the risk to reward is going to be better. entry at approximately 32.35 and a target that is at least 30 pips lower and a stop loss that's about 30 pips higher. So it's about 1-to-1 in this example. Great day trade. You're done. You're over with. Is that all it has to give? No. A ton of these trades have way more to give. So you take a little bit of that profit off the table, and then you let the rest of it run. And Boris, if you want to cut in, I've muted you, but you can unmute yourself anytime. So that's the way it's going to work here. You can take a little bit of that profit off the table, let the rest of it run. There is no one day of the week that works better, and there's no one trading session that's only going to work with this. This is a pure day trading strategy, and for a market that's open 24 hours a day, it's exactly what the day trading doctor ordered. Let's look at some more examples here. Next example, February 14th. Happy Valentine's Day. Close above the dark cloud. Then we get above 225 and we get the 10 candle rule. Entry at about 31.70. Exit around 32.10. It's about 40 pips. Stop loss just below 31.20. So it's a 2-to-1 reward to risk ratio. It's no problem using this. You can use pin bars. You can use support and resistance. You could use pivot points for your exit. You could use a lot of other things. We'll get to that later, but those are all things that you could do. Here's the next trade, February 15th. Close below the light cloud. You can see it's not going to produce a ton of false signals here. It's not going to produce them. Sometimes the CCI is already going to be at overbought or oversold at the entry. So you give it 10 candles of room. You give it 10 candles and that's it. And then you let that profit come. Next entry, sell below the light-colored cloud, February 15th. Sell on a close below the light-colored cloud. Stop loss above the cloud. So entry around 31.40, stop around 31.70. It gets down as far as about 30.85. It's a great risk to reward. It's a absolutely great risk to reward. So this is the trade we went over at the very beginning. It brings us kind of back to where we were. This is what it looked like today. It went further than that. It doesn't have to stop at 225. That's why we don't just buy it and turn around at 225. So Boris, let me know questions that came through that you saw. I'm going to rapid fire answer those questions. I'll start by going back over the settings again. Ichimoku settings, 18, 52, and 104. CCI set to 94.
Okay. There are a couple, most of the questions really have to do with trailing the stop and some cloud adjustments. So one interesting question is, I think, coming from Judy. Let me just make sure I get it. It says that when, everybody's scrolling away from me. Just one sec, let me get it. She says, when letting trade run, cloud changes from light to dark. What do you do what do you use to trail the stop?
That's great. The CCI is always the trail. The CCI governs our exit, period, on the profit. On the stop loss, the cloud's going to trail our stop loss. So as the cloud falls, so does our stop loss.
A lot of people are asking for the settings again, and Rob will go over them. But just so that you let everybody know, he's going to, I believe, provide either this presentation or the rules to this presentation to everybody who is in this webinar. Is that correct, Rob?
Right, exactly.
So you don't have to worry about making sure that you jet it all down. We'll have that information for you.
And those settings are on the screen in front of you right now in case you need them. Eurodollar is my favorite. I trade the Aussie dollar with this. I don't think you should trade the Thai baht or the Mexican peso or the Turkish lira, ever.
Or the South African rand.
Yeah, right, exactly.
I mean, if you look at what Rob's strategy is all about, it's really a continuation strategy. What he's looking for is certain fulcrums, certain points in the price action when it just kind of tips over into an uptrend or a downtrend. And generally, that is basically a function of some kind of news flow or some sort of sentiment change that's driving that move. And using the indicators, he's able to really, when you look at a quality strategy, it's all about eliminating, not about adding.
Okay, Boris, that's great. I really agree with...
asking, using the system...
Yeah, go ahead.
Go ahead, Rob. Go ahead.
Great questions coming in. The 10-bar trade thing. If the CCI is already at 225, positive or negative when you open the trade, give it 10 bars. That's it. Cut it off. How do I make the lines transparent? I just make them transparent. I color them white, or I just color them transparent on my charts. I don't use the other lines. I don't use them for trailing. I don't use them for entry. I don't use the other lines on the cloud. Of course you can. Yeah, I mean, you could use those. What if you trade this on the London session and you trade the 1 minute chart? How many trades could you get in the London and New York sessions? You get 1 to 3, as many as 5 trades during those sessions. I trade the euro dollar and the 5 minute chart for this. I only enter off of the cloud. And one thing that I thought was really interesting, Boris, was that somebody said this looks like a flow trade. And it's fascinating. Boris and I have... This is very similar to a flow trade. This will look a lot like a flow trade. And you're going to hear more about flow trading tomorrow, but these are really complementary to flow trading. It's absolutely perfectly clear. And David says, so it's scalping on a 1 minute chart. I don't even know what scalping is. It's just short-term trading on a 1 minute chart. Scalping, I always have this notion that scalping is closing your eyes and pushing the button. Would this work on the Asian session for other? Yes. And
hey, Rob, this is a really interesting question that I just wanted to pose to you. I need to find it. It was, I think the general question was, here it is. Have you had to adjust the setting due to market volatility? My suspicion is probably no, but I'm just curious if you've come across that problem.
I don't change it at all. Yeah, it's absolutely true. Someone said, was this just an entry below the cloud on the Australian dollar? This is a live chart right now. I'm going to look at it right now and show you about look at the Australian dollar. Today we got a close below the light-colored cloud over on the left here. That was a sell trade. I sent that out as a signal. A little bit later on, after the Aussie report, we got a close above the dark cloud. That didn't work. Stop out. It didn't work. Now we're getting a close below the dark cloud. It's not an entry for a trade because we don't sell below the dark cloud. We only sell below the light cloud. So there's no entry on this right now. The euro entered south today, sell trade over here, and exited right over here in this area. But if you'd kept it open, and I always have a secondary kind of longer profit target for these, like we talked about. Give it 70 extra pips and see if you can get it. All right, back to the presentation here. We're going to let you all get out of here on time. Lots of great questions. It's been just fantastic questions. Let me tell you a couple of things. Someone said, are you going to sell us something at the end of the webinar? I think that's the greatest. No, I'm not actually. I'm going to give you something for free. I enjoy free. I think you enjoy free. So I'm going to give you something free. I'm going to give you the recording for free, and I'm going to give you, excuse my friends, a shitload of trades for free. So hold the phone if you think I'm about to ask you for your hard-earned money. A lot of you want to know more about this strategy. You have a bunch of questions about it. How in the frick are we ever going to get through all of it in one session? We're not. So I'm going to ask you for something. In exchange, I'm going to give you something more. And here's what it is. At this website, tfl365.com, I do lessons about trading for a living, looking at things from a different perspective, how to test a strategy, how to build a strategy, how to trade a strategy. I teach strategies here. I answer all the questions about the Ichimoku system here. I have 2 hours of recorded video already here that answer additional questions about the strategy. It's already there. It's already on the website. It's all ready to go. And I'm not asking you for any money. There's a free trial of this that includes the expanded commentary on this system. And I want to repeat that again for those of you that think I'm some money-grubbing jackass. That's not what I am. Let me tell you what I am, though. I'm asking you to go to this website. I'll show you TFL365.com. This is my website where I teach this strategy and I go into great detail about it. And every morning I send out alerts on options, stocks, futures, and Forex. You can see them on the right-hand side of the page here. And I also have, as I said, expanded commentary inside of the bonus area of the website about the cloud that answers more questions, that gives you more details, and that expands on this. I'm not asking you for any money for it. I'm saying that there is a free trial. If you click on the upper left-hand section of the website, you can try it for free. TFL 365 is a website dedicated to teaching you strategies about the market and strategies about the mindset and the psychology of trading for a living. There are hundreds and hundreds of members of the website from all over the world, and I'm not asking you to pay for anything. You can try it out. You can learn more. You can get answers about the system if you click on free trial above. We're going to crash the server tonight. It's a dedicated server. We're going to crash it. There's no question in my mind. I added more bandwidth. It's on its own website, completely dedicated, but we still crash it every once in a while. So click on there. The free trial is available. If you like the website, you can stay for longer than the free trial, and I think you're going to like it. But if you don't like it, you can cancel your free trial, and you can still get your questions answered about the Ichimoku Cloud, and you can still expand on it. If the website is busy, it's because I swear to you, I added all the capacity that they could offer. The next thing best is like the Amazon Web Services, Boris. So there are a lot of people hitting this right now. So let me just take you in a couple minutes here. Let me tell you just a few more things about it. Trading for a living is really difficult. There are websites that come out every day on TFL 365. Why we test. Why when we're prideful about the market, it kicks us in the nuts. The 5 stages of success as a trader. Why the talent of being able to estimate things is the greatest talent that you can have in your life. When you should walk away from a trade. Why you could take your second trade first. How to look at losing trades through a completely different prism. A balanced approach to trading and life. Questions to ask about a trading system before you trade it. The CCI lampshade reward system, which is a completely different system. A methodology for inventing your own trading system. The 3 secrets of self-improvement. The power of language. 10 different trading systems explained all at once. When you can quit your job and when you know you're ready to do it. 4 things you can do right now to improve your trading. Day 8, big things come from small things. Single-minded power trading and what a monk can teach us about trading and more. Every day I produce a new lesson. It's a website dedicated to teaching you the things that you need to know psychologically and the things that you need to know in actually learning the step-by-step process of a trading system. In the bonus section, there are lessons on the Ichimoku Cloud and other trading systems. And every day I send you a blog just full of trade alerts on Aussie dollar, Euro dollar, New Zealand dollar, the S&P 500, the OEX, and options trades. The options trades are absolutely spectacular right now, but you might not trade them, so there's a bunch of different things here. Boris, any words before we get to the raffle?
Yes. I'm going to, first of all, give my recommendation to Rob's TFL. He's been kind enough to actually let me test drive the website, and it is awesome. And I think for anybody who is looking to learn about trading, the beautiful thing about it is it's very contained, very small, 5 to 7 minute lessons that you can watch it at your leisure. And some of them have really great kernels of truth inside of them that are worth watching more than just once or twice. And that's just the educational piece of it. The other piece of it, of course, the trading signals and all of the other information that he has on the website are continuously really, really great for anybody who wants to get involved in trading, both as a vocation and as an avocation. So at very least, everybody in this room needs to give this a try, especially since Rob is kind enough to offer it for free. The second thing I want to tell you is that tomorrow we're going to see the flow trade. That's true. But I'm also have a bonus trade. And all I will tell you is think of the word roller coaster of love. That's the only clue that I'm going to give you, but it is a really, really, really cool bonus trade that I've been trading in my own personal account. I'm going to show you live trades I made with it this week for those of you who are interested in just more than flow. So I hope everybody comes in tomorrow as well as they came in today. And now I'm going to leave it to Mr. Booker to raffle it off so that you guys are out of here on time, just as we promised to you guys.
All right, everybody. I'm going to send you the PayPal link right now. You can go directly to PayPal right now with this link. I'm just giving you my PayPal code here. So if the website's down, you can just do your free trial right here. I'm putting the link through on the webinar software. Okay, if you want the recording, we're going to send out an email. After Boris's webinar tomorrow night, we're going to send out a link where you can view the recording. I'm going to send out a link tomorrow morning to TFL members with the recording. And then on Friday, when we've got both of them all recorded, I'll send that link out. Okay. Let's raffle this junk right off. Let's raffle the crap out of it. Boris, let's see. I think I had a raffle idea on here. And I think, yes, it is. What is the name of the first governor of the Australian Reserve Bank, the Reserve Bank of Australia? What was the name of the first governor of the Reserve Bank of Australia? And I'm not going to reward the correct answer. I'm going to reward a completely ridiculous answer. Napoleon Bonaparte. Oh my gosh.
Was it Kurt Cobain?
Oh, it's Alfred E. Newman. Wallaby, Booker, Pock. Who said Pock? That's hilarious. Oh my gosh.
Spock. Joe Biden. I like that.
Mick Jagger, Governor Kangaroo, Hugh Hefner, Ned Kelly. Oh my God, this is so hilarious. Hillary Clinton. Oh, all right, Hillary Clinton wins. Who said Hillary Clinton? Your name is gone. I mean, there's so many people here.
Wait. It's Ilani something Lonnie.
Okay. Oh, I got Ned Kelly here. No, Dave Kowalski. Dave Kowalski. Dave Kowalski, I'm sending you a message. Rob@robbooker.com. Send your email to rob@robbooker.com. Dave Kowalski. And Boris and I will be in touch with you, and we'll set up a call for next week. Everyone, I had a joyful time with you tonight. I'd rather talk to you than almost anybody else in the world. Tomorrow night's webinar is extraordinary. Boris will present his flow strategy. You need to be here tomorrow night. Come back. We're going to answer more questions. We're going to spend more time with you. We're going to talk to you about day trading the year. We're going to talk to you about the struggles that people have. Boris has a completely new something that he hasn't ever shared before in store for you tomorrow night. Appreciate you being here. Boris, thanks for your time.
Thank you, Roberto. It was awesome. It was great. I really learned a lot about the grunge trade and generally about the TFL 365. Anybody who is thinking about trading or just wants to be in a really cool community, I think TFL 365 is absolutely the right place to be, because it's the whole notion behind it, trading for living 365, is really what we're all about. Rob and I have been doing this for many, many years, and we intend to do it for many, many years. We're probably going to be playing shuffleboard and still trading Forex 20 years from now, because we love the business, we love the game, we love the markets, and those of you who share the same passion, we hope you guys come along with us for the ride. So I hope you get a chance to enjoy all of this stuff, and tomorrow definitely a lot of very, very cool stuff, real live trades, and I hope you guys will join us then.
Thank you all. That's it. Good night and good luck.